Hi, good afternoon, everyone, or I should say good morning. It's currently 2:53 a.m. out here in Sri Lanka, and I just wanted to go over my end of the week breakdown as promised. The markets are officially closed for the week, and I am just going to explain my positions and where I suspect price to go opening into next week. As you guys see, I'm on my institutional broker. One of the main rules of an institutional brokerage is that our traders, we have to close out by the end of the week. So by Friday, around 4 p.m. Eastern Standard Time, 4 to 5 p.m. is like my closing hour, and I have to close everything. So we can see some buy stops placed ahead. That's my next projected area where I believe that price will show some strength towards the upside. I'm still on a bullish bias for the longer term, as I did see the bias change coming into the beginning of this month. So we have approximately we have less than 1 week remaining in the market for the month, and this is kind of where it's at. It's kind of at a standstill, so anything can happen. But if we do want to see a bullish close at the end of the month, when you do look at the monthly chart, we can see that it's pretty obvious. There's a bullish Marubozu candle that did break out there was a previous resistance area that's now acting as support, and the next level of resistance is not until like about 2.0. So this is actually on a very strong bull run, and if I am long term, I would like to hold it all the way towards that resistance. I'm not going to go over the monthly too much because, like I said, I'm going to be out of the market a lot sooner than that and be updating you guys on the longer term. But as we can see on the weekly, same thing happened. There was a resistance that just got broken and confirmed. So if you go all the way back towards the summer, July 2021, price did struggle a little bit for a few months going into the summer months. So GA wasn't the best pair to trade in the summer. But as a swing trader, if you were trying to hold this for the next several months, it would have been a good time to enter some longs. And now, as I said, it does look like it's going to be continuing on towards the upside. But right now, we're going to focus on this right here. These 550 pips, which is the range that I boxed out. We can't see it on the weekly yet, so we have to go down to the daily. And now we can actually see a trend being formed. You can see from point A to B, B to C, and C is currently upholding, and we have to see strength towards upside if we want to continue to have C being the base of this trend. So I want to delete a couple things and just put the Fibonacci retracement down. I only do Fibonacci retracements on the daily and 4 hour. Anything else is kind of just test. It's not really as accurate, but let's look at the daily. It did go from swing low to swing high. It bounced off the 0.618 perfectly, and now it's actually on its way towards the upside. This should not be revisited, so if there is a stop loss, my hard stop would be about 300 pips away from the low. So if I were swing trading, here you go, your stop loss would be down there, and your profit target would be very high up. I would say TP1 for swing traders would be about 300 pips up. That's a 1-to-1 reward to risk ratio. And then after that 300 pips, like I said, I do believe it's going to go all the way up as high as another 1,000 pips, so 1,300 pips. You're risking 300 pips, so you got 3, 6, 9, 12. You got about 4-to-1 reward to risk ratio. If you're a long-term holder, let's go to the shorter time frame. Delete that Fibonacci, keep the chart clean. Go swing low to swing high. Just a minute. My mouse doesn't want to comply with me. Sorry, just a minute. This touchpad is I need to get a new laptop. Okay, swing low to swing high. And we're not seeing an exact touch at the 0.618. Like I said, I don't believe it'll hit that at all on the 4 hour. Going back out, we can see that this should show a drive in momentum. So seeing a deep pullback down below, it's kind of unnecessary at this point. we're looking at a smaller trend, which is unraveling on the smaller time frame. So if you are waiting for a break below 8.765 to enter, fortunately, I don't believe that that will be tapered next week. And if it does go into that next week, we have to exit our super short-term trades if you're in any, because what that is going to signal is a congestion for the remainder of the week going into midweek reversal, which then maybe we can see a potential push towards the upside. But looking at the calendar, you don't want to wait until next Wednesday or Thursday to stay into your trades, because that's the switch over of the month. Hence, therefore, there could be a new trend, and you don't want to be waiting for a whole entire week in the beginning of the month just for something to show promise. So we're going to be out a lot sooner than that on GA. Let me delete that fib zone. Let me draw another one right now, see which one I'm seeing on the smaller. Like I said, I only rely on the 4-hour and daily fibs because that's kind of the strongest levels. But once you do get a little bit better at trading, you could look at the hourly and below as potential fib targets. But what I use on the hourly and below, actually, hourly would be my lowest possible Fibonacci time frame. I'm still working on that as well, but I kind of use more price action on the hourly. So what we're seeing right now is a bottom being formed. And if you did draw the fib, you see that this downtrend is currently being tested. There's resistance right above. If you're looking at the possible area of 1.887, there is resistance. Price did tap into it, and now it's testing the previous breakout point that happened earlier on in the day of the 24th. It says 25th on my time because I'm in Sri Lanka, and we are about 12 hours ahead of Los Angeles, so we're a little bit ahead of the Western world, and we are seeing a potential rally. If you're looking at the most recent trend, I can see if I can zoom in. There we go. We're looking at the most recent trend. We are seeing a potential rally towards the upside. This is just a retest of the mid-range support. If this holds into next week, we should see a push towards the upside. This is more or less this is all I really have to look at nowadays when I am looking at the charts, because I am a very short-term trader, so I'm looking at this range to be broken, and if it does get breached, it will be going towards the downside, and I don't want to sit there for more than 2-3 days. So this is a 4-day, pretty much a weekly range that we're looking at right now. And that's all we need to see is 100 plus pips range, because what may happen after that is it's going to go out into the 10-day range, and 10-day range is kind of explaining where the potential first target would be if you do see a break from here. If you see a break from here, you are going to see another spike about 56 pips higher. So this would be a great time to enter some trades. If you want to use the best reward to risk ratio, you're going to be risking about 74 pips. If you do get in at a smaller area, like I said, you can risk 74 pips for a potential, just let this go up, 100 pips, which would be 1-to-1 reward to risk. And then once it does break that target, you can see a very clean move towards the upside, and it'll be a lot better. It'll be about 300 pips. So what you'll ultimately be risking, if you do understand how to trade that way, is you'll be risking about 50 pips or 300, which, it's not too much. Did I say 50 pips? Yeah, 50 pips for 300. So, see one more time. 100 pips for 300. So you got 3-to-1 reward to risk ratio going into the 15-minute time frame. I don't really need to explain this. Looking at the price action, because like I said, I don't really want to do the fibs on the 15 just yet. I got to work on that next week. But we can see it's going on lower low, higher high, higher low, higher high, higher low, higher high. I wouldn't really consider this a swing. So if you're looking at the LE wave, you see A to B, B to C, C to D. Okay, completed this wave. On the downtrend, you see A to B, B to C. It's not really a C, so this does have a highly probable chance of breaking that. That's very short-term lived, and unless you're scalping, I wouldn't really be paying attention to this on a 15-minute. Looking at the overall on the 15-minute, you can see it's you could look at the intraday, and you can see that from 21:45 all the way until 21:45, which is about 24 hours. This is your 24-hour trend that you're looking at right here. That's as far down as I'll break it down in this video for time concerns. It's been about 10 minutes already. I want to get into Euro USD, explain this briefly. Very similar things happening on Euro USD, but it's going on a downtrend overall. We can see from 11th of June until current. If you are like a long-term holder, looking at the monthly, you can see that it did have a very bearish summer. Going into June 2021, into a recent price did have a fundamental shift towards the downside, and that's what we're looking at the very moment is a fundamental shift. It actually dropped about 500 to 600 pips towards the downside. So Euro USD is in a very bearish trend, and there is a potential for price to crash even further and bleed all the way down to as low as 1.2749, but the first target is going to be about 270 pips away at 1.151. So you do have two targets. Looking at the first target just being tapped, maybe it might have a slight pullback, and you don't want to wait there for weeks before you're going to go in. We want the cleanest entries and exits as possible. That's what I'm refining my approach to be, as clean as possible. So looking into the weekly, we see a double top. The support got tested and it got broken and confirmed. So we are looking at some drops. So I wouldn't have any stops above 1.1900 on the weekly look. And no, we're not drawing Fibonacci just yet because it's too wide of a range to be drawing fibs. You don't want to wait several months just to find out that, okay, I'm wrong. We are not swing traders. We are not long-term holders. We just look at the long-term to see our long-term positioning in any liquidity areas that we may be able to crash into. Like I said, this low just got broken. I don't really see this low being upheld, but that's going to be our first target on the weekly, which is about roughly 90 pips away. So if you are short on Euro USD, you are looking at the first 90 pips from current price, about 1.62, 1.60 area. Right above there will be your first profit target. At that point, we're looking at a daily close has to be, preferably weekly close has to be below 1.61. So that's probably where we're going to see the struggle, because the end of next week is going to end during the midweek, and we don't really want to be caught up in any type of pullbacks at the end of the month, because the month is also ending. So we're actually going into a brand new cycle, and we are going into Q4, and a lot of pretty volatile news is going to help determine the push of this trend. But like I said, we're not sitting in the trade for weeks nor months. We're sitting in the trade for, I'm trying to get it down to as low as only sitting in the trade for hours and at a time. And this is kind of what we're looking at now. We're looking at a very strong downtrend on the daily chart. September was a very bearish month. September actually declined about 200 pips. Looking at the Euro USD daily ATR is 40 pips, so it already changed bias for the remainder of the quarter. And going into Q4, which is going to be beginning of October, November, December, that's Q4. The price might continue towards the downside, confirming Q4 bias. But right now, we don't know that just yet, and I would like to see a clean break below 1.65 for a Q4 bias to push towards the downside. I already see Q3 continuing towards the downside. If you look at to your left, you can see back in March it actually broke that low, and unfortunately in August it did have a slight pullback, and that changed the bias towards the upside, and then that kind of ranged because it went back down towards the downside. So it was a kind of a choppy summer. Bias was still kind of bullish all the way until the end of summer. So we got into basically June. Bias was a little bullish, and then June it shifted everything. So I believe the ATR was a lot wider at the time, but yeah, you would have been bearish and towards the middle of June, and definitely would have been bearish, bearish, bearish that whole time until July. July, like I said, was a choppy month, so that was like profit taking on the bigger scale. If you're looking at this trend right here, and yes, if you did get stopped out at some point, which I don't really see much happening, it looks like if you were still bearish, you would have still kept on going until August. August was about the turnaround month where the market kind of said, okay, enough is enough. It kind of got into a range, and that is explaining that maybe between August to October, which is Q4, the beginning, it's going to be choppy. So I got in at the highs of 1.1900 at the beginning of September, and I wrote it down all the way towards the lows, and this is what we're sitting at right now, is that Q4 is beginning, and that month of choppiness is now officially ending, and we should see some continuation up. So resuming back into everything, had to pause the video for a moment, had a slight distraction. 1.17186, Q4 is coming, so we're testing this area of support. We see a daily Marubozu. This is our last hope for the month. So if price does not bounce off from the support, we are seeing a potential drive towards the downside. So we are just testing that daily candle that did pop up. Going all the way to the 15-minute time frame, we can look, see that daily candle kind of playing itself out. And we do have a downtrend, and this is kind of our last hope for the downtrend. So we're not looking at anything above that, or else Q4 we're going to be ending. So about 30 to 40 pips towards the upside. Above 1.17500 would be our potential stop loss area, and if we're risking about 40 pips, which is the 1 day's worth ATR, so we're going out to the daily, you can see 1 day is 43 pips. We're going to be risking that going into next week. I'd be looking for some sell stops. We kind of have to follow up on the candlestick analysis. We see that there is an evening star formation. If you look at the maybe 5 minute, you can see a little bit better. See the last high, bearish Marubozu candle, or bearish engulfing, followed by Marubozu. This is to confirm the candlestick analysis, and it will go down towards the mid-range of that pair. That mid-range was tested, because if you look at the higher end, you can see point A to B, B to C, C to D. So that was a completed wave. D should not be breached. If it does, then we are going to go towards upside and retest the resistance that recently been made. And I don't want to be in the trade for too long. Like I said, if you're looking at this perspective, you can see already that if it does breach that high, it's going to give us some trouble. And I don't really want to be looking at shorts above 1.17400. So we're going to be out very briefly if price does breach that high. That's why I'm not waiting until the break of current support on the 5 minute. If you see current support, this is more of a intercession support. So if we do see potential break below 1.17100, we can see A to B, B to C, and C to D being formed, confirming the down wave for that trend. And that is also showing the weakening of this potential pullback that happened at the end of the day today. And that's what we've seen in Euro USD. It was actually bearish the entire day. Had a slight pullback towards mid-range zone. If you did draw a fib, which is I'm working on that as well, for swing high to swing low, we can see that it actually is bouncing off the 0.618 for just beautifully. It doesn't have to tap it exactly, but if you did put it to the exact precise area, just a minute. It's giving me trouble. Okay, it's not really doing that. Let's do it right here. It did do it from trying to be exact precise. It did go up into the 0.618, and it did show a nice retraction off of it. So that is our signal right there. And going into the next day, I do suspect it to continue on downwards. That's about 10 pips until the support is breached. And continuing on downwards, this is already breached. If you're looking at this time frame, it did shoot down, and then a couple of days ago, yesterday, if you look at it, it did go into a range, and that range was tested. The high of that range, price did reject it pretty strongly, as you can see, going into the new day, and that was a very bearish day. This past 24 hours, it dropped about 45 pips, confirming the downtrend. So that's why we would be out if it does go up any higher than I just displayed. And that's about it. Looking for the price to continue on down into the beginning of the week, continue to see it drip to monthly lows, quarterly lows, if anything, 52 pips away from that. And that would be our first profit target, like I said. If we can get down there before Wednesday, we could see prices continuing to drop, 59 pips, continuing down, weekly time frame. Like I said, end of the quarter, I'm looking at a potential drop to about 100 pips away. If anything lower, I'm going to just hold my targets as low as I possibly can get it. It's about 170 pips away from my sell stop, and that would be where I would be holding it into the middle of the week. But I'll be closing out at the end of the month, so whatever price gives me at the end of the month, it could even do something as simple as this. It could break up and close that. It could explain to me that it's going to be in a range, and at that point, I basically be holding it until looking at the hourly, the next potential area, which would be around the beginning of that trend. So it does breach that high, that this will be my next area, just because, and maybe into Wednesday, we could wait, see a few hours into the day, and then be able to hop on, seeing that it's a beginning of a new quarter with a very tight stop. That stop would be about 30 pips to the high, and I don't think that price would get that high, but 30, 40 pips above, that would be our next area. So that's pretty much it for Euro USD. I want to break down the last two pairs with the time I have left. It's been 21 minutes, but this is definitely going to be a lengthy video for my Academy students. I highly recommend going back to this video and watching it. This broker particularly, this is an institutional broker. This is just my personal broker, one of my personal brokers. We can see that I have a lot of different orders. Price was trending up. We see swing low, swing high, higher highs, higher lows, higher highs, higher lows. It's been going on an uptrend from the 23rd to the 24th of September. We see A to B, B to C on a bigger scale, C to revisit B, indicating that it's going to be in a range. That indication of the range happened yesterday. So for this particular trend, I would like to get out because if you're in any shorts, definitely get out. If you're in any longs, it's just kind of confirming what we already knew. It got into a range kind of middle of the day on Friday, and that range lasted some time, and recently it's been breached. So we are looking at a stop loss right below the end of that range, about 1.922. Anything lower than that, we're out. And looking into the intra-session or intraday time frames, we can see that does line up with our bias. It should continue on the upside. We have A to B, B to C. C has to break above B for continuation upwards, so that's a signal. I would wait for a buy stop above there, so I actually have to clear these trades up. I try to close. What had happened was I tried to close it out before the markets closed, last minute of the day, but it's very hard for brokers to close your order out in the last minute of the day, so I would not recommend doing what I tried doing. That's why I still have orders placed, but I do suspect price to continue to climb towards the upside breakout and go up. And if not, right now we are testing the middle of that range, or about around the top half of that range. So anything that breaches below here, which we can already see that this breach below. So in the beginning of the week, we can potentially see a retest of that middle range. Let me just draw Fibonacci. I like using these. I highly recommend practicing with fibs until you get really good, but we could see it potentially going around the 0.618 and retesting it, which could take several hours. And that's one of the problems. So going into Sunday, it might be a bearish day, or might just break out towards the upside. Overall, we are looking at a bullish run, but at the moment, we are looking at a potential congestion for the first several hours of the market open into the week. And if it does continue on towards the downside, like I said, that's our last resort. So I'm going to be putting the heaviest lots in between the last about the last 5 to 10 pips of the trend is where I'll be putting the heaviest amount of lots. If anything goes below that, I'm going to be out of the market. So let's see what happens next week. I might even just focus on this particular pair into next week, because I did foresee the push off at the beginning of the week. If you look back on the 22nd, it did have a very bearish candlestick, and this would be confirming that drive towards the upside. It has to hold. If not, yes, we could see a drop into the Q4, and I don't really want to be holding any trades into Q4, not until the first few hours at least are already made up. And so this needs to have a breach literally Sunday, Monday, or Tuesday, or else Q4 is going to be beginning, and I don't want to be in that. But if we are looking at a push and a drop above, this is very weak resistance. So it did have that and spent about 2 days in consolidation. This is being tested now, and like I said, it looks like the downtrend is a weakening, and we are looking at a potential break towards the upside. First target on that minor time frame will be about right below 1.928, and then we're suspecting a continuation towards the upside. Let's look at the first target would be about here. So it's about 70, 80 pips towards the upside. That will be our first profit target for USDCHF, and then our second profit target for USDCHF would be, can't even see it up here, very high up. So, we are bullish bias going into Q4. So about 150 pips to the upside, which would be a very nice move, very nice drive. NFP is also coming, and that's just in time. In Q4, we can see NFP is going to be on the first day, so NFP could be used as an excuse to push the market towards the upside. We will just have to wait and see. Running overtime right now, going into Eurgbp. I have some buys. I have one buy remaining. I tried closing out all of my buys. That's what we see. My bias for Eurgbp is bullish. We are at the low of a very, very strong bull trend. Price actually been in congestion since April 2021, and it looks looking to break that. We did see a drive towards the downside, but that looks like it was short-lived, as we did see a potential new rally, fresh rally towards the upside. The ATR is 35 pips at the time. I believe it was 30 pips. So anything above 150 pips from the low, we would signal a drive to the upside. So we've seen 117 pips, didn't necessarily shift the bias yet. Looking at the low, August, there we go. Bias shifted in August. It's kind of hard to see if you're a swing trader, so you won't really see it just yet. But if you do have the, very, very refined perspective of the market, you could definitely see that it did shift. And September was kind of the last resort for the sellers, and it kind of went into a range and kind of invalidated those shorts. You can see A to B, B to C, C to D. That was definitely a brand new downtrend. That was the most recent downtrend that happened in September. And right in the middle of September, the bias did shift to the upside. We see a low right here, high forming. So just do low to high. That's about 110 pips. So it didn't really necessarily do too much, but how would I say this? It's kind of in a range, like I said. So we are looking for that high to be broken before we do see any long-term bullish move. So I wouldn't really look for anything above here just yet. It's in a tight range, but let's just say our first target, if you are in buys at the moment, would be about 40-something pips away. What I'm going to do actually is I'm going to close out until that high is broken. Then I'll have a better, better support towards the upside. I mean, look at that take profit wasn't even that far above, but that would be actually be a buy stop, and stop loss on this would be at the moment, if you're in longs on this trade, a stop loss would just be shortly below. So you're looking at a stop loss at potential support about 60, 70 pips away, around 1.85. Anything below that, it would be a nice stop out. If you're long, if you're short right now, I'd be very wary. I wouldn't take anything below 1.851 as your profit target. And if you are short and you haven't learned your lesson yet, your stop loss would definitely be above 1.61, nothing above there. So you have a 1-to-1 reward to risk ratio for bears. But another reason why I'm not in bears, and I'll explain right now, is when you do look at the bear trend, what you see that it was A to B, B to C, C to D. B to C was not a strong pullback, so this could be easily breached, and we can see that there is resistance right above. And what can you see right now? There's an uptrend forming into that, and this is a very weak downtrend at the moment. It does look like price could more than likely tap and taper into 1.56. There's nothing really supporting it from above, so I do see that potentially being broken into the beginning of next week. It might take a few hours, but I do see that 30 pip range to be broken. A solid break above there would then signal a further move towards the upside, and this is weak resistance, so I wouldn't even worry about that, and I would actually hold this until strong resistance is met. That's, like I said, my bias is already bullish, but a stronger resistance would be around 1.869. That'll be resistance number 1. So it already tapped that a couple times, bam, bam. Second tap, so the third tap kind of would see a drive to the upside. So that would be a first target would be about 51 pips away, which is almost 2 times my ATR. And target 2, which would be my actual target, which would be very high up, around 1.883, which would be a solid 150 pips rally. So that's the 2 moves that I'm seeing as the Eurgbp into next week. We're going to get out before the end of the month, and then we're going to re-enter once we get that signal. NFP's coming, like I said, and all pairs are kind of affected during NFP, and there's going to be all other major announcements going into next week, but that's all I really have to cover for these pairs. We're just going to have to wait and see. Maybe I'll introduce another pair going into next week. Let me just see real quick. I'm very interested in trading GJ again. Let me actually go into GJ file, profiles. I stopped trading GJ for a moment because it was just really, I was just getting hammered in GJ, so I left it alone. But I do believe it's actually at a potential break towards upside now on the hourly. Looking at the 4-hour, yeah, everything on GJ looks like it's going to be going up. This is the last thing I'm going to cover. 236 pips higher. Just a moment. 240. Yeah, so GJ looks like a new uptrend is in the making, and I definitely would keep an eye on this right here because it did just show the bias that is gone. The downtrend is invalidated. That's why I left GJ actually, because I was bullish and then I had to whip straight to the downside, shifting my bias to the downside, and I was, at that point you're looking at a bearish bias because it was just in a very big range and I didn't like it. Come on. So there we go. It was in a very big range. I didn't like it. It did explain that it was going to go down, but downside of what? Downside of the uptrend. So if you were short this past week, then you would, obviously you're getting whipsawed again, so this would be your last resort of a short. So going into next week, you could potentially see drive to the downside, and your stop loss would be right above maybe 152. And I don't really want to do that because that is a very tight stop. It's not a bad R&R. If you do short it from there to there, you could try to take it down another potential 200 pips to most recent support. It is showing some bearish momentum. So at the moment, I guess you could say that GJ, you could be bearish. You could be looking at a downside. Like I said, that was going up. It knocked that down. So the most recent trend is actually showing bears, and then we can see it went back up. So That's why I'm kind of stuck in this pair right now. I'm not really messing with it. It's just a very nice, very big range. And on the daily, we are looking at some form of drive towards the downside. That's probably what I'll be looking at for the most recent move for the best R&R. But uh, if you're looking at the long-term bias, you're probably going to want to stay long on this pair. Like I said, this isn't the greatest pair for me to trade at the moment. That's why I'm kind of out of it. It does look like it's going to consolidate for another like week or two before showing any type of strength. And yeah, we're looking at this current resistance to be broken and another one right above for me to get a clear run to the upside. Um, on the downtrend, it's not really that strong. Like I said, if you're looking at a short to give you the best R&R, yes, you can definitely enter because uh, what we're seeing on the hourly right now is a retest failure, and there's no potential support for at least the next 130 pips. So if you want to get a nice counter move in on GJ, that's probably going to be your best bet is to hop in right now. See, the support got breached, and then it kind of went into the high range of this newly established downtrend that happened on the end of the day on the 24th. And if you want to play it safe, wait for A to B, B to C, C to D. 150 at the low of 151 is where you're going to enter your D and take it all the way down to about 149.5 psychological area, which is about 150 pips away with a stop loss of about 100 pips away. So you're going to get a nice solid 1-to-1 reward to risk. I say that would be the weekly trade for GJ if you're actually going to that pair. You could definitely get some smooth intraday moves, but me personally, I'm staying out of this because there's no clear trend on the longer term. Looking back into the March, you can see it's in a big range. It's going to take a big push for this pair to either go up or down. It does look like it's going to continue towards the downside. It's at the top, but at the same time, if that does get broken at any moment, which looks like it's continuing up, going into Q4. So beginning of this Q4 is going to determine where the next quarterly goes. And if it does break higher, let's just take a step back. You see a very bullish quarter for GJ going all the way up into potentially, about 2,000 pips, which is pretty high. That would be our Q4 move. And if it does retain that top right there, we could see a crash nosedive into potentially 1,500 pips towards the downside, which would signal the a bearish Q4. So just gonna have to wait. I'm glad I'm not doing this on the ultra small, ultra large time frames. I could see the macro view. I'm gonna stay on the micro for now. A to B, B to C, C to D, A to B, B to C, C to. There's no D yet, and C is kind of being tested. So that would be our best option. GJ is a 15 pip drive towards the downside. That would be the signal, and then you're about 60 pips stop loss. So 60 pips to that would be the best R&R you're gonna get right there. The very best R&R you're gonna get there. It's just to 150 pips, so that's a 3-to-1 reward to risk ratio. And that's it, guys. Been going a little over time, so I'm gonna just suggest this video for my students, my academy students, and for anyone else. Just if you would like to watch this video, I mean, you already made it to the end, so I hope you found some great insight. If you want to see my intra-day, intra-week signals, you can join my Discord. The link is in my bio on my Instagram, or you can look into my academy if you want to learn the way I trade. It's www.forexmanagement.net, and the link is going to be in the description of this video right below it. And click on Forex Academy, and you can learn to trade a very similar system to what I'm trading. And if you want to join my signals group, you can either join the Discord group, which is a link in my bio. Click on Discord. It's in the bio of my Instagram. But if you're viewing this on a on a web browser, just go to www.fishingtips.com and click on Discord, and you can also join it from that website. Hope you guys have some great insight on this video. I'm looking forward to next week and testing out this super short-term trading. All right, everyone, have a great day and a great weekend, and rest up, recuperate, and let's go into the end of Q3, beginning of Q4, very strong. Let's attack these markets, make some money, and yeah, that's it, guys. All right, peace.